Financial literacy is about understanding how money works. It's about making smart choices with your money. This includes how you earn, spend, save, and invest. In today's world, being financially literate is more important than ever. Without financial literacy, it's easy to feel lost and overwhelmed. You might make decisions that seem good in the short term, but these choices could have negative long-term consequences. This essay will guide you through the essential elements of financial literacy. Taking control of your finances doesn't require being a math whiz or a Wall Street expert. It's about adopting simple, practical habits. The first step is to understand your current financial situation. Once you have a clear picture, you can start setting realistic financial goals. Let's take control of our financial futures and unlock a world of opportunities. Budgeting often feels like a restrictive diet for your finances. But budgeting is actually your roadmap to financial freedom. It's about understanding where your money is going. Think of your income as a pie. Each slice of the pie represents a different spending category. Budgeting helps you allocate each slice wisely. Without a budget, it's easy to overspend in certain areas. A well-structured budget aligns your spending with your values and priorities. The first step in creating a budget is to track your income and expenses. Start by gathering all your financial statements. Then, list all your sources of income and track your expenses. Use a spreadsheet, a budgeting app, or even a simple notebook to record your transactions. Once you have a clear picture of your income and expenses, you can start analyzing your spending habits. There are various budgeting methods available. The key is to find one that suits your lifestyle and preferences. One popular method is the 50/30/20 budget. Regardless of the method you choose, the key to successful budgeting is consistency and flexibility. Saving is the cornerstone of financial well-being. It's about setting aside a portion of your income regularly. Even small amounts, saved consistently, can add up over time. Every dollar you save is like watering that seed. Over time, it will sprout and flourish into a strong financial tree. Saving provides the financial security to turn your goals into reality. One of the most important reasons to save is to build an emergency fund. This is money set aside specifically for unexpected expenses. A common rule of thumb is to have 3 to 6 months' worth of living expenses saved in your emergency fund. Start by setting a realistic savings goal for your emergency fund. Consider setting up automatic transfers from your checking account to your savings account each month. Keep your emergency fund in a separate, high-yield savings account. Saving isn't just about preparing for the unexpected, it's also about planning for the future. This includes saving for both short-term and long-term goals. When saving for multiple goals, it's helpful to create separate savings accounts for each one. For short-term goals, look for savings accounts with higher interest rates. For long-term goals like retirement, consider investing your savings to outpace inflation and grow your wealth over time. Saving is essential, but it's only one part of the financial puzzle. Investing takes your financial journey to the next level. It's about putting your money to work for you, allowing it to grow and build wealth over time. Investing might seem intimidating at first, especially for beginners, but it doesn't have to be complicated. With a little knowledge and guidance, anyone can learn the basics and start building a solid investment portfolio. The world of investing offers a wide array of options, each with its own risks and potential rewards. Understanding the different asset classes is crucial for making informed investment decisions. Stocks represent ownership shares in publicly traded companies. Bonds are debt securities issued by companies or governments. Mutual funds and ETFs offer instant diversification and are managed by professional portfolio managers. Investing in real estate can offer attractive returns and tax advantages, but also requires significant capital and comes with its own set of risks. Investing is a marathon, not a sprint. It's about making informed decisions and staying committed to your long-term goals, even during market fluctuations. Start early and invest regularly. The power of compound growth is amplified over time. Diversify your portfolio. Don't put all your eggs in one basket. Invest for the long term. Avoid trying to time the market or make impulsive investment decisions based on short-term fluctuations. Do your research or seek professional advice. Before investing in any asset class, thoroughly research and understand the risks involved. Section 1. Understanding debt and its implications. Debt is a fact of life for many people. It can be a useful tool when used responsibly, but it can quickly become a burden if not managed carefully. Debt is essentially borrowing money that you must repay with interest. This interest is the cost of borrowing money. It can quickly add up, making it harder to get ahead financially. There are different types of debt, each with its own characteristics and implications. Understanding these differences is crucial for making informed decisions about borrowing and managing your debt effectively. Secured debt is backed by collateral, such as a house or a car. If you default on the loan, the lender can seize the collateral to recoup their losses. Mortgages and auto loans are common examples of secured debt. Unsecured debt is not backed by collateral. This makes it riskier for lenders. Credit cards and personal loans are common examples of unsecured debt. Revolving debt, like credit cards, allows you to borrow up to a certain limit. You can make minimum payments or pay off the balance in full each month. Installment debt, like mortgages or student loans, involves borrowing a fixed amount of money. You then repay it over a set period with regular payments. Each payment typically includes both principal and interest. Section 2. Strategies for effective debt management. Managing debt effectively is crucial for a healthy financial life. Create a budget to track spending and identify areas to cut back. Focus on paying down high-interest debt first. Consider consolidating debt to save on interest. Negotiate with creditors for better terms. Explore debt consolidation or balance transfer options. Breaking free from the debt cycle requires discipline, commitment, and a solid plan. Take control of your finances and make conscious choices. Change your spending habits, increase your income, and build an emergency fund. Seek professional guidance if needed. Achieve financial freedom with determination and the right strategy. Financial literacy is not just about numbers and spreadsheets, it's about living a richer, more fulfilling life. When you're in control of your finances, you're free to pursue your passions, achieve your goals, and build a secure future for yourself and your loved ones. It's about having the peace of mind knowing that you're prepared for whatever life throws your way. Imagine the freedom of being debt-free, the security of a comfortable retirement, and the joy of providing for your family's future. These are just a few of the tangible rewards of financial literacy. It's about transforming your relationship with money from one of stress and uncertainty to one of empowerment and opportunity. Financial literacy empowers you to make informed decisions about your money, aligning your spending with your values and priorities. It allows you to break free from the cycle of paycheck-to-paycheck living and build a solid foundation for a brighter future. Remember, financial literacy is a journey, not a destination. It's an ongoing process of learning, adapting, and making conscious choices that serve your best interests. It's about celebrating small victories along the way and staying committed to your long-term financial goals. Section 2. Achieving your financial dreams. Setting goals and reaching milestones. Setting clear and specific financial goals is paramount to achieving financial success. Goals provide direction and motivation, helping you stay focused on your financial aspirations. Whether it's buying a home, starting a business, retiring early, or traveling the world, your goals should be meaningful and aligned with your values. Start by identifying your short-term, mid-term, and long-term goals. Short-term goals are achievable within a year or two, such as saving for a down payment on a car or a vacation. Mid-term goals typically span 5 to 10 years, like buying a home or paying off student loans. Long-term goals require a longer time horizon, such as saving for retirement or your children's education. Once you've established your goals, break them down into smaller, more manageable milestones. This makes them feel less daunting and allows you to track your progress along the way. Celebrate your achievements as you reach each milestone, no matter how small. This reinforces positive financial habits and keeps you motivated on your journey. Remember, your financial goals are not set in stone. Life is full of surprises, and your goals may evolve. Regularly review and adjust your goals as needed to reflect your changing circumstances, priorities, and aspirations. Section 3. Leaving a legacy of financial security. Financial literacy is not just about taking care of yourself, it's also about leaving a legacy of financial security for future generations. It's about teaching your children about money, setting a good example with your own financial habits, and ensuring that your loved ones are taken care of even when you're no longer around. Start by having open and honest conversations about money with your family. Teach your children about budgeting, saving, and investing from a young age. Involve them in financial decisions and empower them to make responsible choices with their own money. Consider creating a will or trust to ensure that your assets are distributed according to your wishes. This will provide peace of mind knowing that your loved ones will be taken care of in the event of your passing. Leaving a legacy of financial security is not just about passing down wealth, it's about instilling the values of financial responsibility, planning, and generosity. It's about empowering future generations to achieve their own financial dreams and live fulfilling lives. Section 1. Your journey to financial well-being. Congratulations, you've now been introduced to the fundamental principles of personal finance. You've learned about the importance of budgeting, saving, investing, and managing debt. Remember, financial literacy is a continuous journey, not a finish line. It's about making informed decisions today to create a more secure and fulfilling tomorrow. Think about your financial journey like climbing a mountain. It can seem daunting from the bottom, but with each step, you gain a clearer perspective. You develop the strength and resilience to overcome obstacles. You learn to appreciate the journey as much as the destination. As you continue your financial journey, remember that setbacks are inevitable. There will be market fluctuations, unexpected expenses, and moments of doubt. But don't let these challenges discourage you. View them as opportunities for learning and growth. Adjust your course, seek guidance when needed, and never lose sight of your long-term goals. Section 2. Embrace the power of financial knowledge. Financial literacy is more than just numbers. It's about empowerment, opportunity, and freedom. It's about taking control of your financial destiny and creating a life of purpose and abundance. By embracing the principles outlined in this essay, you're taking a proactive step towards a brighter financial future. Remember these key takeaways as you navigate the world of personal finance. Knowledge is power. The more you understand about money, the better equipped you'll be to make informed decisions that align with your goals. Small steps lead to big results. Start small, be consistent, and celebrate your progress along the way. It's never too late to start. Whether you're just beginning your financial journey or looking to make a change, it's never too late to take control of your finances. Embrace the power of financial knowledge. Share what you've learned with your loved ones. Together, we can create a world where everyone has the opportunity to achieve financial well-being and live a life of purpose and abundance.